Mahesh Patil joins us, Co-Chief Investment Officer with Birla Sun Life Mutual Funds. He joins us live now. Mahesh, good morning. Thank you for joining us. Mahesh, when we went home on Tuesday, things were broken down. But as we walk into trade this Thursday morning, things are looking slightly upbeat.
Yeah, that's true. I think yesterday's comments where the new RBI governor have given a renewed boost of confidence in terms. I think there were a slew of measures I think which were announced yesterday. I mean, first attack was to really boost the rupee, really to strengthen the rupee. So I think a lot of measures which have been taken. I think that would lead to we expect some rally in the rupee, especially the two measures which have been taken by the RBI governor, in terms of allowing banks to borrow to the extent of 100% of the tier 1 capital compared to 50%. That alone can lead to around $7 to $8 billion of fundraising, which can be done in the next 2 months or so. And again, the FCNRB, okay, where the RBI is giving a kind of a subsidy in terms of so that they can raise funds against that foreign funds. So that again would lead to around $7 to $8 billion of inflow, potential inflow. That's what we heard talking to the sources. And again, mind you, again in this next couple of months, we are expecting the trade deficit data, which is expected to come, should be pretty positive. We expect around $8 to $9 billion of deficit. And given this backdrop, and also the fact that the borrowing by the OMCs, okay, which has been also been taken out from the market, that's almost around $10 billion on a monthly basis. So all these factors, I think you could see a kind of rally in the rupee, though it might be temporary. And I think a lot of positives for the banking and financial sectors, not from a near-term perspective, but from a longer-term perspective. And so the banking and financial service sector, which has seen a sharp correction in the last 3 months, it's underperformed massively. I think there you could see some kind of jump up over there. Though mind you, I think the concern in terms of slowdown in growth, in terms of asset quality, I think those continue. And that will weigh down on the sector from a medium-term perspective. But I think in the near term, I think we could see a rally led by the banking and financial services sector.
Mahesh, it's interesting that you say that, because just this morning, in fact just few minutes back, Moody's downgraded 11 banks' sub-debt ratings, and that includes names like HDFC, ICICI Bank, Axis Bank, amongst many other PSUs as well. Which way are you tilted? Do you like the PSU lot or the private banking space?
Yeah, I think clearly, as I said earlier, we are seeing, I think all the problems which have started, I think the current account deficit issue, I think that would lead to a significant slowdown in economy. I mean, we are expecting this year the growth to be somewhere around 4 to 4.5% in that region. And given the fact that, again, while interest rates still will remain at slightly high elevated levels, I think the stress on asset quality will only increase as you move forward. So in that context, I think we feel that the PSU banks would be worse off looking at the kind of bad loans, okay, restructured loans what they have on their balance sheet. So while there might be a temporary relief because of these measures, I think the medium-term outlook still remains pretty bad for some of these PSU banks. I think private sector banks, again, where I think clearly the focus should be on asset quality. So wherever there is comfort on asset quality, I think where we see that hit which can be really banks can take the investor, I think those banks would be able to really come back, okay, once things start to normalize in the economy, and they should be able to bounce back much faster over the medium term. So I think clearly our bias still remains over to private sector banks and banks which have got more of a retail franchise rather than on the corporate side, because corporate side is where we see a lot of stress, not only in the medium-sized corporate, but even that some of the large corporates are likely to come under stress. In fact, the CDR pipeline, okay, which we monitor, has shown an increase even in the last quarter.
Mahesh, if the Fed tapering is off and if oil prices they correct, do you think Indian markets could rally?
Yeah, I think, see, again, the clear concerns for Indian markets have been not only, I mean, current account deficit, how to fund that current account deficit, and that's what has led to pressure on the rupee. So I think if concerns about Fed tapering ease off, then there is a likelihood of that the flows, okay, which we have seen a large outflow of money in the recent past, not only in the equity side but also on the debt side. And if we see if an oil also which has spiked up currently because of geopolitical concerns, Syria, if that cools off, I think then there could be a reason for markets to be slightly better off from the current levels, because that clearly would, the concern on rupee would abate, because that's being a bigger challenge at this point. We have seen a huge volatility in rupee in the recent times, and even if it stabilizes, okay, if it doesn't come down below 60, but even at a particular level, I think that will give confidence back to foreign investors to look at India again.
Right.
Mahesh, things are volatile and things in the short term will remain volatile. So along with this volatility, where is the opportunity?
Yeah, I think clearly we have seen a lot of volatility in the market, not only in the equity market but also in the currency markets every day. Very difficult to take a view, because every day you get different data points, and we see the markets going kind of yo-yo. So, but I think in this volatility, I think it's giving opportunities for certain good quality stocks. We have seen some selling from FIs. Probably we have seen the last few days some forced selling. And as a result, we have seen some of the better quality names also correcting significantly, say more than 10 to 15%. So this is the time to really add some of these better quality names, which probably one couldn't look at because the valuations were never comfortable and it didn't meet your investment criteria. But I think post the correction, I think these are opportunities to really add back and build up the portfolio, get out some of these stocks, okay, where there is concern, balance sheet issues, and take the opportunity to reconstruct the portfolio. That's what we have been doing. But again, very difficult to really play the market in any particular direction, because we've seen that sustaining a particular trend is very, very short. I mean, even in the sector rotation, what we have seen has been happening at a pretty fast pace. So I think very difficult to, I would say, to really trade the market, but whenever there is opportunity, stocks come, it's a great opportunity to build a portfolio from a medium-term perspective.
Mahesh, what is your own sense? Do you think the market has troughed out or bottomed out at that 50-100 mark, or do you think that there is further pain in store? What we are seeing today is just a technical adjustment because the market was so loaded with shorts.
Well, I think clearly the current move, today's move, what we are seeing is a reaction. Okay, so as I at least said, there is a lot of underperformance we have seen in the banking and financial services sector because of all the concerns. And so we have seen a kind of a bounce back because of the yesterday's move by the RBI. But I think for the market to really sustain from these levels, it has to be followed by further steps to really revive. These are measures what RBI announced, really short-term measures really to address the current concern. But I think for structural, the economy has to revive from current levels, and we have come back to a growth rate, 7-8% kind of a growth rate. Then we have to stimulate the investment climate, and that has really taken a big beating. So I think it has to be followed by measures by the government in terms of reforms to how do we revive the whole business confidence, bring back investments back, so that we have the engine working for us for sustainably higher growth from a medium to long-term perspective. So I think that is really key for the market to sustain and to be really positive from a medium-term perspective. Otherwise, you will see this market moving in a band what we have seen for so many months now. There is, if it moves to a higher end and then again it slips down because the fundamentals are still not really catching up.
Folks, let's be clear. The governor yesterday was very impressive. Whatever he indicated was also very impressive. But that will not fix your CAD or your fiscal deficit. It will not kickstart growth. So more than material impact, today markets are only going up because of sentimental impact. And like Ashwini pointed out, traders were short and the short trade was getting very crowded, and markets are simply bouncing back because short sellers are now running for cover. Mahesh, if your view is that in the short term rupee will stabilize and Indian economy eventually will recover in the second half of this financial year, is it time now to get out of IT? Because what clearly has worked for IT is a weak currency, and if rupee strengthens, maybe that trade could reverse.
Well, again, see, while we expect rupee to stabilize, I think it will still be at a level, because I think, mind you, the pressure from the current account deficit would still remain. We are not expecting current accounts to vanish suddenly and become positive. And so I think while in the near term rupee will stabilize, I think IT sector has been driven not only because of rupee depreciation. I think it's also been done well because the outlook in US and Europe has improved significantly in the last 3 to 6 months. And even the growth, okay, what you're expecting for IT companies this fiscal year, I'm talking to these companies, I think they are slightly positive. So I think it's more driven by a demand recovery, I think, which is much more sustainable going forward. And I mind you, I think even the analyst forecasts for some of the IT companies don't factor rupee anywhere between current levels. Even at 62, they're still pegged at around 57 or so. So yeah, while it might underperform a bit in the shorter term, but I think the fundamentals still remain pretty strong for the IT sector as a whole going forward.
Mahesh, what is it that you're reading when it comes to the metals pack, and does it seem like this is only buying because the space had been so beaten down and a couple of positive data points coming out of China? Do you think this rally is going to be short-lived?
Well, the metals have been driven by two counts. One is, three counts I would say. One is, obviously, as you said rightly, they were beaten down, hugely underperformed in the last 2 years. That was one, so there was definitely value over there. But I think the main trigger was the two things. One is, we have seen some revival in metal prices, as rightly said, because on the Europe side, we have seen good data coming in, PMI data from Europe. But more importantly, China, more recently, we have seen slight bit of recovery. The industrial side has recovered, so PMI data in China has surprised positively. So that's on the margin positive, and we have seen increase in the prices of, say, steel or copper or aluminium recently. And thirdly, I think the rupee depreciation, especially for Indian companies, I think that's again a big boost. So a lot of, like in the steel sector, for example, despite domestic demand growth being zero or marginally negative, Indian companies have been able to actually export because the realizations in dollar terms have been, in rupee terms, because of the dollar depreciation has been pretty good. And actually, India from being a net importer has become an exporter. So I think, so there are all these three factors, okay, which have led to slightly improved outlook for the domestic metal sector. So I think as long as these two factors remain, as long as we see China being reasonably okay, I think some of these stocks still have potential because the valuations are still at extremely low levels. Some of the stocks are quoting below book value. So I think there is still some steam, I think, in the metal space. Though I think it's very difficult to be structurally bullish on the commodity space. But I think tactically, I think near term the outlook still remains pretty good for the metal sector as a whole.
Right, Mahesh. Really appreciate your time and so glad you could join us.